In this video, guys, we're going to look at what is the bid and ask. Stay tuned. Hey traders, a very warm welcome to you. Thank you for joining me. Alright, so in this simple, quick guide, I'm going to tell you the difference between the bid and the ask, what they mean, what does it mean for you as a retail trader. So welcome to the channel. If you're new here, make sure you stick around and subscribe. Got loads of videos, loads of topics covered: mindset, discipline, trading strategies, basics, jargon, etc. If you're into trading, you like trading, you'll love it here. Make sure you are subscribed. Okay, so what's the bid and what is the ask? So imagine we have two people and there's a buyer and there's a seller. And imagine they are buying an asset. Imagine they're buying shares in the company that sells these whiteboard pens. And imagine they say, okay, this buyer says, you know what, I wouldn't mind buying some shares in this company. I'd like to buy 100 shares, but I'm only going to pay $17.85 maximum for them. Not a penny more, not a cent more. I don't want to pay any more than that. That's the maximum. If I get them cheaper, then fine. But you know what? I'm prepared to pay $17.85 for them. Great. Now you've got a seller, for whatever reason, wants to sell. You know, this is what makes a market, guys. One person wants to buy, one person wants to sell. Fortunately, there's a lot of flow of these people. That's caused the market to move, causes the transaction to take place. It means that we can trade and take advantage of these differences between buyers and sellers. But I digress. This seller comes along and says, hey, I want to sell my shares. I've got 100 shares to sell. However, I'm going to only take $17.86 minimum. Not going to take $17.85, not $17.84, $17.86 is the minimum that I will take. It's the lowest I will go. So we don't have a transaction here. You know, we have a point where we've got a buyer willing to buy, a seller willing to sell. $17.85 is his highest price, $17.86 is his lowest price. There's no deal. Now, if someone comes along and says, you know what, that seems like a good price, I'll take it, I'll sell you my shares for $17.85, then a transaction is taking place and that comes through as a trade, and we see that happen on your price chart. And if the price moves, that's how we get these candles formed. Okay, so assume, let's go back to the initial example. We've now got a buyer at $17.85, seller at 86. The best bid, and if we're talking about the stock exchange, and let's keep it simple for now, a centralized exchange where everyone comes in to transact, slightly different in the forex market, but if we're talking about stock exchange, NYSE, NASDAQ, FTSE, etc., these are exchanges that are paid. This is where you pay exchange fee when you do a transaction to kind of ensure the credit worthiness of all the individuals and your counterparty, and they act as a kind of central point where everyone trades. Now for this particular stock or this whiteboard pen, whatever the company may be, a hypothetical company, this is the current price. So the highest price that anybody at that moment in time is prepared to pay and has put that order in will be the bid, and that's the best bid. And the highest price, or the lowest price should I say, that someone's willing to sell at of that asset at that particular time is the ask, the best ask. And so we have the bid at $17.85, we have the ask at $17.86. The difference between the two is the spread. Now, if someone comes along, and let's say you come along and you go, you know what, I'm going to buy this, I think this is going to explode, this is going to be kind of 20 bucks in no time. You might come along and take those 100 shares from this seller on the order book at $17.86. All of a sudden now that $17.86 is gone, and the next price available might well be $17.89, say. Okay, let's say someone else who's seller number two, let's say you've got a seller here, seller number two, I won't kind of write it all out, but let's say he says that, but he says, I'm not willing to pay, I'm not willing to let them go for any less than $17.89. He now would be the best ask because someone's taken that best ask there at $17.86. We've come along and we've decided it's a great buy, and now the best bid is $17.85. The best ask is $17.89. And again, someone could come in and a third seller could come in and say, you know what, I'd take $17.86, come back in, put their order back in the order book at $17.86. Well, that would be the ask now. Now, that's a centralized exchange. Very quickly, if you're trading via a CFD broker or spread bet broker, and check out our channel sponsor, guys, if you're interested in a new broker, link in the description below. But if you're trading with them, then this almost doesn't apply because we're just taking the price that they offer. If we're not trading directly on the underlying market, sometimes we may choose to do that via the NYSE, via the NASDAQ, and you have a broker that allows us access to that accordingly. But assume we're trading CFD or spread bet, you know, this will just be on the order ticket. So the ask is there, the bid is there. Now if we want to buy, the only options we have are to hit the ask or to place a limit order in, but then to get filled on the limit order, the ask would have to move down, the whole price would have to move down, and the bid would have to become 86. And that would be when people are selling and causing the price to go lower. So when we're just taking the price that's offered, the bid is the price that we can sell at, the ask is the price that we can buy at that moment in time. If we can put a limit order in, if we're to wait, that bid and the ask will change. And of course, as transactions take place, let's say someone buys the 86s, someone buys the 89, this buyer then says, oh, you know what, it's running away from me, I'm prepared to pay a little bit more, I'm prepared to pay 88. All of a sudden, we might get a situation where it goes, 1788 to 1789. And that's where we see the price move on our chart. And imagine that with many, many participants over whatever period of time we're looking for, you can see the price go up and down as buyers and sellers are transacting. But there's always going to be a best bid, there's always going to be a best ask. In the UK, we call it an offer, bid and offer. That means the price you can buy at is the ask or the offer. The price that you can sell at is going to be the bid. All right, guys, hope that's helped. If you like this kind of stuff, thumbs up is appreciated, as is your subscription. Take care, see you next one. Bye-bye.